Insurers and reinsurers are increasingly focusing on ESG, environmental, social and governance practices, and incorporating them into their investment decisions and underwriting practices. I'm isnt for AM Best TV, and I'm joined by Jessica Botelho, Senior Financial Analyst, to talk about a report we've recently published on the ESG market. So ESG is becoming a big topic, an increasingly hot topic. Why are companies feeling that they need to invest more in ESG practices?
Well, really, the main driver is pressure from stakeholders. The three main stakeholders that we mention in the report are, firstly, investors. Investors are demanding more non-financial information to make better investment decisions. Consumers are also expecting more from the companies they choose to engage in and ensuring that they share the same values that they have. And then thirdly, regulatory bodies, especially here in Europe. They are looking for companies, especially financial institutions, to become more transparent and specifically address how they're incorporating and thinking about ESG risks and opportunities in their organization.
So if there are lots of different pressures and factors influencing companies, why isn't there a uniform approach? Why are some companies more embedded into this ESG principles than others?
Yeah, so in Europe, there's certainly a very large uptake of introducing and incorporating ESG into their organizations, but not all companies are doing this, particularly outside of Europe. Let's take coal as an example. Many European insurers and reinsurers have exited coal, whether that's one, no longer providing insurance cover to these companies, or divesting from their investments in coal. But what this does is it kind of leaves a gap in the market as well. And other companies, particularly those outside of Europe, have found that this is an opportunity for them. And they can actually charge higher premiums for providing this cover because there's less capacity in the market. So in the short term, these companies are certainly benefiting from being able to provide this premium at a higher rate. But in the longer term, again, they need to realize that there's also a risk of elevated reputational risk and what that may potentially have on their ability to retain existing customers and attract new ones.
So for the companies though that do really invest in ESG practices, do they benefit materially? Do they benefit financially, for example, from this method?
Yeah, good question. This is an area of much debate in the market, and there's really no consensus. You can find research supporting each side of the argument. AM Best's view is that companies that are able to better manage their risks and opportunities through strong corporate governance over the longer term will be able to demonstrate more stability in their operating performance. And it's the same on the investment yield side. So holdings in sort of toxic industries like tobacco and coal may over the short term provide higher returns, but over the longer term they also face a risk of becoming stranded assets on the balance sheet, which has been, again, a very hot topic recently in the market.
Can we talk about ratings? So in terms of AM Best's ratings process, how do we incorporate ESG into that process?
So firstly, it's probably worth saying that we've always implicitly considered relevant and material ESG risks and opportunities in our rating process. So we've got the 4 building blocks: balance sheet strength, operating performance, business profile, and enterprise risk management. And where an ESG risk or opportunity was relevant, which means it's within our time horizon, as well as material, so having a materially financial impact on the company, it would have been captured in our analysis. However, in December 2018, we've actually incorporated a section within our best credit rating methodology which explicitly discusses ESG and the impact it has on each of the building blocks. Now, it's important to note that this is not a methodology change, but it was just our way of becoming more transparent to the market to say how we are looking at these ESG risks and considering them within our analysis.
A copy of AM Best's most recent report on ESG, as well as AM Best's rating methodology, can be found on ambest.com. For AM Best TV, I'm isnt.